Hey, thanks for making it to Veterans Info Tap. I'm glad you made it. I have David Piatek from VA Housing Education with us because if you don't know, the VA's VASP program is being eliminated. They are getting rid of this program, and I'm going to tell you that for those that don't know, and then we'll jump over to David. And I look, I blab a little bit. It's me. I'm rated for that. If anybody cares, so the VASP program was created because the VA, in my opinion, failed. So back in the day when COVID was rampant and people weren't going to work and losing their jobs, people were falling behind on their mortgages, and the VA said, okay, well, let's create this COVID forbearance, essentially allowing lenders, servicers particularly, who had VA loans that they were servicing, getting the payments on, they could work with those veteran borrowers and allow them to skip X number of payments and essentially add them to the end of their loan. So your loan was a 30-year loan. Well, now if you don't make payments for a year, it's kind of like a 31-year loan, but you didn't make payments for a year. They add 1 year to the end. And that was fine and working, and it worked out well for many people. And this is the same option that your FHA borrowers get, your conventional borrowers get if they fall into some sort of ability to make their payment issue. So the VA allowed this to happen with all the lenders sending all that out. Then this program was set to expire. Now the problem with that is you would think, and I was so irritated, David, when this came out a long time ago. I'm like, how can you not see the writing on the wall? If the program's going to expire and people are currently in that program and you rip the plug on it and you say no longer can you add payments to the end, what do you think's going to happen? Well, that's what the VA did. And subsequently, borrowers who started the process were told, sorry, we can't add your payments to the end. You need to, I know you couldn't make them, but now you need to make them. And now you owe $20,000 in back payments, or we're going to foreclose on you. And that was essentially the options. There's more to it, but just to kind of give the overview on that. That gave birth to VASP. VASP was very short-lived, about a year. There was a lull there, and the VA created the VASP program, which essentially said, hey, we, the VA, will, as a last ditch effort to save your home, we, the VA, will purchase your loan from your servicer, give you a 2.5% interest rate, and you start making payments to us. And that saved another, I don't know how many people, 10, 15,000 homeowners maybe entered the VASP program. And now they're pulling the plug on that. This is important for people to understand.
Right.
It is gone. It's going away. It's no longer going to exist. The worry, David, was what's happening now? Like, what is the replacement? I know you found some information on what could potentially be the replacement. I'd love to get your thoughts on where we're going, what you saw, and please, the floor is yours. Thanks for hanging on with me to give kind of to front load it with kind of what had happened to take us here. David, go.
You definitely need to know the past before we go into the future. So good. Thanks again for having me on, Jason. So correct. So the VASP program is ending. And now at the House of Representatives, there's a bill 1815, which is the VA Home Loan Program Reform Act. Now, there's pros and cons to what has happened. Pros or cons in the sense that they ended a program. And a lot of veterans came to the table and said, well, why isn't there a program that exists? But now there's a negative part to it, because now people are looking at the VA loan program going like, wait a second, the loan is extremely flexible. It lets veterans go up to 60, 70% debt to income ratios, which has now kind of shed light on that, where the VA has very loose credit standards, which does work in veterans' favor. But now that is under light. But we'll go into that here in a second. So essentially what this House of Representatives Bill 1815 says is, the program is going to be about a 3-year program, right? So they're still going to have a limit on it. It allows the VA secretary to then go in and help a veteran guarantee a VA home loan to help them avoid foreclosure. And it also secures interest of the VA into that property. Now, before last year when they made the VASP program, I found it pretty interesting that they would even do that program because the VA doesn't service mortgages, right? They don't have a servicing division. So in this new bill, they're like, and I think that's why they stepped away from it, to be honest.
Yeah.
But yeah, because it didn't make sense that they even came up
Right.
with that proposal and who approved it. But in this sense, they're basically saying that they can have a claim on a property up to 20% of unpaid principal balance to guarantee that loan. Now, a couple things have come to light with some of the research that it really recently has been done, which I think is very shocking. So one, I'm going to talk about what the average credit score of someone that's delinquent, right? So this is for people that are out there, like, to really understand like your financial picture. So the average serious delinquency of a VA buyer currently is a middle credit score of 650. Their debt to income ratio is higher than 43%, and they have no savings. Okay, so that's one indicator versus non-delinquent borrowers, which are 720 or higher, spend 43% or less debt to income, and they have savings, which is pretty significant. Another thing is that of the people that they pull out of delinquency, okay, 1 in 4 of those people will go back into being defaulting on their mortgage. Now, if you think of how VA home loans are done, it's to give you some background, is that the VA guarantees 25% of a loan. Okay, so if you take out $100,000 loan, the VA says, hey, we'll guarantee 25% of this. Lender's on the hook for the 75%, right? The 75,000. That's why you have great interest rates. That's why you're not paying private mortgage insurance. Huge benefits to the program because the VA is taking a big chunk of the risk. You would say the first 25%. So if a house goes into foreclosure, now all of a sudden they're guaranteeing, like, you could sell it at a much bigger discount and still make your money back, right? From a lender's perspective. But when they are coming in and guaranteeing 25% of it, then they're coming back in and then guaranteeing another up to 20%. You're talking about now the VA potentially guaranteeing 40 to 50%, which could be a 40 to 50% loss on that, which again, great that we brought this attention, I guess, to ourselves, but now there's a downside because now people are looking at it and going like, wait a second,
Right.
what is our loss on these programs if veterans do not step in and make the payments?
Right.
I don't know what your thoughts on that are, Jason.
It's interesting because part of the look, we can't kid ourselves, right?
Right.
Congress looks into this, right? Now they have the
Now they
flashlight
have it.
and they're looking in the corners, and what they think and the question that they ask themselves is, does this specific program benefit taxpayers?
Right.
Not veterans, taxpayers, right? Of course, I mean, look, everybody wants a 2.5%. I'll take that today. Thank you. Right. So
Right.
there is a, there's a couple different things, right? I mean, look, the idea to do this, I mean, I get where it came from, but I'm with you as far as the VA is not set up to be a loan servicer, nor should they be. And that's just making it a bigger monstrosity. You should keep the loans with the servicers. You should allow them flexibility, like with anything that's a Freddie Mac or Fannie Mae conventional product or FHA. They should be able to just utilize the same aspects as any one of those federally, recognized loans. So I think that they went down the wrong path. It sounded good. It looked good for the veteran community. But I think that just the fix was really reeling it back to the lenders and letting them be able to actually work their full quiver of arrows as solutions with the borrower. It's do you have any insights on the 2.5% interest rate VASP program deal? If somebody's currently in process, are they still moving forward, or is that ending? Is there any, did you get any sort of indications of any of that?
That's my understanding, that if you're already in that program, you're grandfathered in
Mhm.
into it. And I believe they have a deadline, but that's like coming up real quick to come up to that. And remember, you can't volunteer for it. The lender has to volunteer you for it. So I'm also assuming that right now the VA is probably like, hey, we're backed up. Like,
Right,
maybe slow down. I mean, that's my personal opinion on that. Because
right,
why at the ninth hour they're trying to get people in? I've
right,
talked to people that reached out from some of the videos, and they're like, I was gonna take the VASP program, but then I decided not to because I went and got a job, but now I'm back in that same position,
right,
and now I'm in like this piece. Now, just a couple things to note, that you can do loan modifications, and from what I've been hearing, they're not as favorable, but if you can get back to getting on time payments, you can save the house, which leads me into a pretty big statistic from the article that I read talking about this bill. And Jason, this is shocking, is that 84% of people that are delinquent, according to this article, and I can link it down in the like when we do the video, I'll we publish, I'll link it in there. But 84% of veterans that are currently delinquent in foreclosure, potentially losing their home, can actually sell it and still make on average about $100,000 in profit. I want you to think about that. You don't want to be in a position that you lose, because if your home really goes through the foreclosure process, you do lose a portion of your benefits. Okay. And then the longer you let it drag out and you know you're not going to make the payment, the more they tack on legal fees. And holy cow, I looked at someone recently. $6,000 in legal fees were being added on every single month. 6,000. If they would have just sold their place, they could have walked away with hundreds of thousands of dollars. But at this point, they let it drag out. It's like almost 3 years now. Come on.
right,
You know how much money you're paying just in attorney fees? So
right,
you have to look at your situation and see, do I sell my home? And yeah, I may not be doing financially well, but you're sitting on a lot of money. You could take
right,
that money, put yourself in a better financial position, pay things off, then maybe rent a place, rent it for like a year, reestablish yourself, because at least you save your credit, you save your
right,
VA loan, you reestablish yourself, and then you can go back in and buy another property and use your VA home loan.
right.
So you have options.
Yeah.
But it's unfortunate that veterans go to that point where basically we're saying here, majority of people in this situation can save themselves.
Yeah, absolutely. And one of the things that got me thinking here when you were talking about that is everybody's circumstance and situation's different, right? So somebody who's sitting on equity and if there's no avenue to go, it doesn't hurt to reach out to you to see if refinancing is an option. If you owe a bunch of back payments, but your credit's not horrible, maybe you can still, maybe you're at the very beginning of that process, right? And so maybe it's not
Well,
as
before it
bad.
starts.
Yeah, right before
Yeah,
it starts,
before,
right?
just make
Yeah,
sure, because once
yeah,
yeah, that's the catch 22 on this, Jason, is
right.
that once you miss your first payment, it's 12 months out from refinancing.
There you
So,
go.
but
So
I mean,
important.
I don't think normally it just happens like one day you wake up and you're like, oh, we don't have any more money. Like,
Right,
we're not going to make the payment. This is like something that happens over time. So,
right.
this is why budgeting and credit's so
Yeah,
important. And when, again, like I always say, when you don't need money, people want to give it to you. And when you need it, nobody
right,
does.
right,
You can't, that's kind of like where you want to be, where, hey, before I need the money, do I
right.
need to change my, like my
Yeah,
personal financial picture so I don't
yeah.
get myself in trouble?
Yeah, that's a good point. So what happens is you're scraping the barrel, you're selling something, you're doing this, you're pulling it all together to make your mortgage payment, and you do. And you do that one or two times and you don't see any light at the end of the tunnel of that changing, and your credit's still fine and you're still on time. Maybe you're paying it on the 15th, maybe you're paying it 20 days late, but it's not 30, and it just keeps rolling. The writing's on the wall. Have those discussions before it turns very bad. When you refinance, you typically will skip the first month's payment.
Yep.
So that's a benefit, and that could help you out. and get you back on track. So always a good option to look into. Always communicate with your servicer for sure if you get into the bad spot. And then I would say also, we talked about if you're sitting on equity and you turn out that you need to sell the house, and at least you could walk away with it and preserve your VA loan entitlement. That is a huge, huge benefit that you don't want to lose. And sometimes you just need to take that knee and readjust. The one more thing that I'm going to throw out there is, in some cases, people owe more than it's worth, more than they could sell it for. And for those folks out there, talk with your servicer. Maybe they'll allow you to do a short sale. That would be probably better than a foreclosure. But definitely do your research, speak to an attorney, do that type of stuff to make sure that you're making the right moves for you and your situation. There are so many different situations that it's impossible to talk about them all and really dive into it. So always seek the help of a licensed, trained professional in whatever you need to do to make sure that you're making the right moves. Any final thoughts on this new legislation? Good, bad, indifferent?
I'll say that keep your eye out on it as it kind of goes through, because they might make some changes to it. Two, if you're facing challenges or you're about to face challenges, you can reach out to the VA regional loan centers. They pick up your phone call and they will talk to you. It's not like, I would say it's one of the best government entities, which is the VA regional loan centers, because they'll listen to you. They'll reach out to the servicer and try to see if there's a plan. But just make sure before you reach out for help that you have a plan. Like, how can you make your payment? Because if you're in a position that you have no plan and they're like, well, you're not working, but you want to keep making your payment, like, have a plan of what you want to come to them. But that way it's going to save your home or just put you in a better position. So knowledge is power in this case.
That's right. All right. Well, hey, with that, thanks so much for watching. We really appreciate you. If you have any questions for David, reach out to him. His information is in the description. Will be in the comments as well. And don't be surprised if he chimes in those comments as well. So thanks so much for watching. We appreciate you. Have a great one. And remember, if we don't take care of each other, something went wrong.
Have a good one.